Hello everyone, I am Dr. Goldbell Rachel, Assistant Professor and Head, Department of BCom Business Analytics, is here with you today to talk on the topic leverages in financial management. Let's see the meaning of leverage. According to the dictionary, leverages is an increased means of accomplishing purpose. Leverage increases the power of person. In financial management, the term leverage is used to describe the firm's ability to use fixed cost assets or funds to magnify the returns to its owners. James Owen defines leverages as the employment of an asset or source funds for which the firm pays a fixed cost or a fixed return. There are three types of leverages: operating leverage, financial leverage, and composite leverage. Let us see each one in detail. Operating leverage. Operating leverage may be defined as a tendency of operating profits, that is nothing but the EBIT, to vary disproportionately with sales. Operating leverage is said to exist when a firm has to pay fixed costs regardless of the volume of output or sales. Now, in this operating leverage, it functions with three factors: the amount of fixed cost, the contribution margin, and the volume of sales. The formula to calculate our operating leverage is contribution by operating profits, and degree of operating leverage can be calculated by using the formula percentage change in profit by percentage change in sales. Operating leverage is double-edged sword. Operating leverage increases with fixed cost. Operating profit of a highly leveraged firm would increase at a faster rate for any given increase in sales. However, if sales fall, the firm with a high operating leverage would suffer more loss than a firm with no or low operating leverage. Hence, it is said that operating leverage is a double-edged sword. Next, we are going for financial leverage. Financial leverage may be defined as a tendency of a residual net income, that is PBT, to vary disproportionately with operating profits, that is nothing but the EBIT. It indicates the change that takes place in the taxable income as a result of change in the operating income. It signifies the existence of fixed interest or fixed dividend bearing securities in the total capital structure of a company. Financial leverage has two types of leverages. One is favorable financial leverage and the other one is unfavorable financial leverage. The use of fixed charges, sources of funds such as debt and preference capital, along with the owner's equity in the capital structure, is called trading on equity or financial leverage or gearing. The formula to calculate financial leverage is operating profits, that is EBIT, by taxable income or PBT. Degree of financial leverage can be calculated by percentage change in taxable income by percentage change in operating profits. Now, there are a few differences of operating leverage and financial leverage. Operating leverage is concerned with the investment activities of a firm, and financial leverage is concerned with the financing activities of the firm. It is determined by the cost structure of a firm, and it is determined by the capital structure of a firm. The higher the proportion of fixed operating costs, the total operating costs in the cost structure of a firm, the higher is the degree of operating leverage. The higher is the proportion of fixed charges bearing capital to total financial changes in the capital structure of a firm, the higher is the degree of financial leverage. The degree of operating leverage measures the business risk associated with the firm. The degree of financial leverage measures the degree of financial risk associated with the firm. Now let us see the last type of leverage, that is combined leverage or composite leverage. To tell you very easily, a combined leverage or a composite leverage is the combination of financial and operating leverage. Now let us see the formula for combined leverage or operating leverage, which is nothing but OL into FL. That is, as I said, it is a combination of operating leverage and financial leverage. Now, which is equal to contribution by PBT. Thank you for your attention.